Hello everybody, welcome once again to your own channel Krishna Singh Deo. Today we are meeting here for class 12 students and we are going to do one very important concept in today's class. What is that important concept? The important concept is issue of shares on pro rata basis. Yes, in the previous class we had learned when the number of shares applied by the public is more than the issued share by the company or invited share by the company, this situation is known as oversubscription. Number one option for the directors to deal with situation is reject the excess application, and option number two is doing the pro rata allotment. What is pro rata allotment and how to pass the journal entries for it? Let's learn it. Oversubscription, this we had learned in previous class. So let's understand how to deal with this situation in case number two. What is case number one? Let's understand it with one example. So let's say company has oversubscription. The situation is like this. The company issued or invited application for, let's say, 10,000 shares of rupees 10 each, whereas company has asked rupees 2 on application, rupees 3 on allotment, rupees 2 again on final call. So this is 3 plus 2, 5, 6, 7. And let's say rupees 3 on final call. Okay, sorry, I have written final over here. It's not final, it is first call. So like this, company is going to ask the amount 2 rupees on application, 3 rupees on allotment, 2 rupees on first call and 3 rupees on final call. Now what is happening? The public, this is invited number of share. Invited number of shares are 10,000 share. Public applied for, let's say, 15,000 shares. So if 15,000 shares are being applied by the public, this is a situation of oversubscription. In previous class, we had learned case number one, when directors exercise option of rejecting these shares, means the money of 5,000 share was refunded to the public because the company can issue only 10,000 share. Today we will understand how to deal it with this situation differently, and which is called pro rata. Case number 2 of oversubscription is pro rata allotment. What is pro rata allotment? We are understanding in today's class. Pro rata allotment is what? When the directors of company decide that okay, this 15,000 applicants of shares will not be rejected. Okay, means everybody will get share, but all of these people are going to get only 10,000 shares. Means what? If somebody has applied, let's say, for 5 share, that person may get 4 shares. Somebody has applied for 3 number of shares, so that person is going to get 2. Means like this, the company is dividing this 10,000 number of share among these 15,000 applicants. So it's not allotting more number of shares, it is allotting only 10,000 shares only, but the allocation of these shares is done in such a way that the person who has applied for no more number of shares is getting less number of share. Now in this case, what happens? A typical situation comes, let's say 15,000 shares into 2 rupees per share. The applicants would have given 30,000 rupees at the time of application money. Now what are we doing? We are giving them only 10,000 shares because we are giving them shares on pro rata basis. Till here we understood, ma'am, but what will happen to this excess money which had come? In the previous case, remember what we had done in the second entry, we had rejected this application and to bank we had written on the credit side, we had refunded the money to the shareholder. Now here what are we going to do with this excess 10,000 rupees? This is what we have to be very careful about in pro rata allotment. Now company will save itself from doing 2 transactions. Instead of doing 2 transactions, what company will do? Company will keep this excess money which is being given by the shareholders, and this money will be adjusted towards allotment. Means what? this 10,000 rupees will be taken less from the shareholders at the time of allotment. When I talk about allotment, at the time of allotment, company is going to ask 3 rupees per share. So 30,000 rupees will be asked from the applicants of share, but 30,000 rupees will not be received by the company because of the simple reason 10,000 was received by company earlier along with the application. So this time company will be in receipt of 20,000 shares only. I hope you are getting it. Let's do it with the help of one table. So let's say this is my invited number of share. Invited shares are 10,000. Applied number of shares are 15,000. Okay, application money received, it's 15,000 multiplied by 2, so we have received 30,000. But obviously the money of 30,000 rupees cannot be transferred to share capital, because in share capital only the number of shares which are being issued by the company can be transferred. So transfer to share capital will be $10,000 multiplied by 2, means we can only transfer 20,000 rupees to share capital. Now how much is excess money with us? Excess money is 30,000 minus 20,000. What is 30,000? 30,000 is this amount which we received from public. 20,000 is the amount which is being transferred to share capital. So 10,000 is the excess money. What are we going to do? Company will not refund this 10,000 rupees to the applicants. It will keep it with itself, and at the time of allotment, adjustment on allotment, I should write adjustment on allotment, adjusted on allotment, this whole 10,000 rupees will be adjusted at the time of allotment. So in this case, instead of returning the money to the shareholder, company used it on the later date along with the allotment. Now let's see how do we pass the journal entries for this situation. So the first entry in this situation will be bank account debit to equity share application. And here we will be multiplying 15,000 into 2. Why 15,000? Because the applications were received for 15,000 shares. So this amount we are going to fill over here, which we have already calculated. Rupees 30,000 we are going to write here because company received 30,000 rupees from the shareholder. In this second entry, we have to be careful. We are going to write equity share application account debit with the same amount with which it was credited. We will write here 30,000 to share capital, equity share capital. I'll write equity share capital over here, to equity share capital. And here the amount is going to be this one, transferred to share capital, 10,000 multiplied by 2. So 20,000 rupees is getting transferred to equity share capital. But what to do with the excess money? The excess money will be adjusted towards allotment, which we have written over here. So this will be adjusted towards allotment. That is why here we are going to write equity share allotment, equity share allotment account, and this is 10,000. Got it? Now it will have impact on the fourth entry also. What is fourth entry? Our third entry is allotment money getting due. So here let's see how do we pass allotment money getting due. Share allotment account debit to equity share capital, and here only the allotted number of shares should be multiplied with the allotment money. This we have learned in the previous case also, where the rejection is done. So impact of oversubscription is going to come only in the first entry, where you multiply with 15,000. Here the multiplication will be done with 10,000 shares. 10,000 multiplied by 3 rupees was allotment money. Let's check over here. We had written here, see, this is written over here 3 rupees at the time of allotment. So here I am multiplying 10,000, which is my number of shares, with rupees 3. So this is 30,000 rupees. 30,000 rupees is due from the public, but are we getting 30,000 rupees? No, we are not getting 30,000 rupees from public. Why? Because of the simple reason, we had received 10,000 in the advance at the time of application because of oversubscription, which will be adjusted over here. So when I pass this entry, bank account debit to equity share allotment, I am going to write the amount of 20,000 over here. Why 20,000? Because from 30, 10 was received earlier. Now the question should come into your mind, ma'am, when we have debited this account with 30,000 and we are crediting only with 20,000, how this account is getting closed? Normally with the amount with which it is credited, with the same amount it is debited, and this is how our account is closed. Ma'am, you had told us in the beginning that all the accounts are temporary account. These accounts are opened and closed. Only the share capital, security premium and bank account is open till the end. Yes, what I had told you earlier, I'm still sticking to those lines only. Let's see how this account is getting closed. Let me make the ledger for you and make you understand this equity share allotment account. So equity share allotment account will look something like this. Equity share allotment account, in the first instance, let's see what we had done over here. In the second entry, you can see equity share allotment account is credited, and on the debit side you have equity share application. So here I am going to write by equity share application, by equity share application. Equity share application, how much we had received over there? 10,000. Now in the third entry, how much we have debited? We have debited share allotment account with 30,000, and on the credit side it is written equity share capital. So share capital, how much I am writing? I am writing 30,000, the amount with which I had debited equity share allotment, and here on the credit side it is written by share allotment 20,000. Okay, now you can see the account is tallying, account is closed, no balance is left. So because in the second entry we had credited equity share allotment account, so automatically equity share allotment was credited with 10,000 earlier and 20,000 here, and the account is being closed. So this is how allotment account is going to be closed, and this is how we deal with pro rata allotment. Let's see once again how to deal with pro rata allotment. Pro rata allotment means a situation where more applications have come by the public for less number of shares invited by the company. This is known as oversubscription. Here, if the directors decide to do the pro rata allotment, in that case the excess application money which has come is adjusted towards the allotment. Like in our example, we had assumed that the company has invited 10,000 applications from the public, but the applications have come for 15,000. So 10,000 multiplied by 2, the company had to receive 20,000 rupees, but company had received 30,000 rupees because people have applied for more number of shares. So what company did this time, instead of rejecting these shares, 5,000 excess share, it divided this 10,000 share among 15,000 applicants or applicant of 15,000 shares. So it had excess money of 10,000 share. How this excess money of 10,000 rupees have come? You can see this 30,000, which was the application money received minus application money transferred to share capital. This is what the money of excess money of which is to be adjusted towards the allotment. So it is adjusted towards allotment. When we pass the entry, first entry is going to be with equity share application, which is going to be 30,000 rupees on 15,000 10,000 share, we received 2 rupees per share. And while passing the second entry, in case of rejection, we had written over here bank, but here we are writing equity share allotment because this excess money will be adjusted towards allotment. During the allotment receiving entry, we will reduce this 10,000 rupees from here and will write only 20,000. This account was made just to make you understand how equity share allotment account is getting tallied and getting close, no balance is left. So this is how we deal with the allotment, student. I hope you all understood it. In the coming class, we will solve one question related to allotment on pro rata basis. Allotment on pro rata basis is one of the most important concepts. So you must practice a lot of questions related to this. Till now, we have whatever we have done. I'm expecting that all of you are revising it. If not, please start revising. Otherwise, this chapter you will not be able to understand. This is an easy chapter, but at the same time, a lot of concepts are there, so you have to understand all of that and keep practicing. So that's all for today. If you have not yet subscribed the channel, don't forget to subscribe the channel and like and share the video. We will meet once again. Till then, bye. Have a great day.